Quick disclaimer. Trading carries a high level of risk, so anything done is your responsibility. The content on this channel is for educational purposes only and are my perspective and personal opinions. Yeah, let me just leave that there. So, you can still hear me, right?
Yeah.
Yeah, cool.
So
So, jeez, and peace. Let me make sure this here actually. Oh yeah, it actually is catching you. Talk. Let me hear you.
yeah.
Perfect. Yeah. So, where was I? Oh yeah, cool. So in here, I actually in tabs trade ideas. This is the community, by the way. So when you get in, you see the welcome and disclaimer, and all these different charts and stuff like that.
Yeah.
It's a fairly new server, so what it is that going on is I pretty much have this community here where people can come in, discuss ideas, and learn the same concepts that I teach in, and keep each other accountable and them kind of stuff. I have the videos in here that I create and post on YouTube, so it's all here. What I teach specifically in market mechanics, I have different things in here that can literally help you get profitable really quick, supporting docs. And then here's like the trade ideas. So every time I get into a trade, I show you. This in and of itself is like a course. You know what I mean?
Yeah.
So you can follow through with everything that I'm doing. Is full transparency. You see when I take losses. You see when I make the big wins. You see all these different things, and that's the whole purpose of the Discord community, for you to have that access to do so. All right.
Yes, sir. Respect.
Yeah, man. I've been doing it now for about 8 years, so quite some time I've been doing it. Yeah, bro. I've been losing a lot of money until I actually came across the mechanics of how this thing works. Not just, I just, trading anything that I think I see.
Yeah.
Cool. So I mean, me and you can jump into it right now. I recording it, so either way, when I finish, I can post it, and then whoever sees it can see it later on. So
Right.
since I can treat this like the first one-on-one, what I can do is actually create a group and remove all of this. Let me just add all of these actually. Let me see. This is a fairly good spot to use. Let's see. So, bam. And then get rid of those. And then actually select these. Where are these? Cool. Bam. Cool. Perfect. Alrighty. So the concept is very simple, right? You have people that teach support and resistance and many different types of systems, but those things are just specific systems within a system. You know what I mean?
Yeah.
Within the market mechanics of it. So the mechanics of it is very simple. If you think about a real life situation of, okay, I have something, if right here you can see the price of what the gold is right here, and versus where it's at currently. So how it works is like this. If I have something that's valued at $100 and the price of it goes to $300, I initially made $200 on my 100 that I just had. Therefore, when I sell it, I'm making a profit of 200.
Yeah.
That's supply, right? Supply. Now, whoever I sold it to obviously wants it for that price because they believe that the price of that will go higher. So they find value in it. Therefore, that's a demand, and I had the supply, right? So that's in literal layman terms. So now if I make it even more practical, cool. I have a PlayStation 5 and the value of that is $200. With that $200 PlayStation 5, somebody else wants it for $300. Now there's a demand for it, so I'm willing to sell that for that $300. Now I made $100 profit.
Yeah.
Now, if there's a surplus of PlayStation 5s, I'll never be able to sell it for that price. Why? Because everyone has one, right? So the more scarce something is the more expensive it'll be. You get that concept, right?
Hmm.
Like Ferraris versus Hondas. The
Yeah.
reason why Ferrari is more expensive is because it's scarce, it's more expensive. You know what I mean? So that's just how it goes. So if you look on that concept, you can understand what you're seeing in the charts. It's just a bunch of people saying, okay, I want something at this price, and then I'm going to sell it when it gets up to another price. That's all it is. So they're holding something that they find to be valuable, and then over time it increases in value, so now they're going to sell it. That's as simple as that. So you have, it's only two things you can do in the market: buy and sell. So now that you understand how simple the actual practicality is of it in real world, like situations, this is how you read that in the charts. Cool. Market mechanics. Let's go. In order for you to actually see how market mechanics works, you got to think about how the candlesticks are laid out, highs and lows, right?
Yeah.
The high of a price is where you see a high here and then it makes a low and stops there, surpasses it, comes back, does the same thing, surpasses it, does the same thing on repeat. This is the mechanics of the market. This is just what it does on repeat, on repeat, on repeat. As you can see, right? Then you have instances where it goes lower, but then surpasses it again and just continues. This is market mechanics right here in its simplest form, right? That right there is the mechanics of the market. Now, what I want you to understand is this. These are your highs, right?
Yep.
These are your highs. Believe me, bro, when I tell you that what I'm showing you here is gonna make you profitable, because it's super. This is not me showing you a concept. This is me showing you the actual thing, how it works, which will then make you profitable. You know.
Yep.
So this is what you're after. I'm gonna show you. Coolio. So those are your highs that price is currently trading through, which indicates that there's demand in the market, which means people believe that the price of gold or the price of whatever asset you're trading will increase, because you see that momentum going that way. And this is on a daily chart, daily time frame. So it's the same across all time frames. It doesn't matter what you're trading, daily, 1 hour, 1 minute. It's all the same. As you can see, if I zoom out all the way, it's the same thing as this. From here, let me actually just do it like this so you can see. So from here to here,
yeah,
to here to there, and it's the same thing from, the same concept, but on a bigger scale, versus me zooming in and showing you the exact same thing happening on a smaller scale. So this is how you can understand what's going on internally and externally on a bigger level. Because if I go, this is on a daily chart, as you can see, 1 day right here. I think you can see this right here. If I go to a 1 month chart, 1 month, now that looks like a smaller case for you to see, right? It looks similar to what this one looked like, but that's on a monthly case. And as you can see, it repeats the same process. Look at the internal thing: up, down, up, down, up, down. Smaller scale stuff, just on repeat, doing the same thing. Then you see it start to break back down. Sure, some supply starts to come in because people now are trying to sell their gold. Then you just see the thing start to do the exact same thing again. That's just the cycle of the market mechanics of it. Right, cool. This is how the market moves. There's nothing outside of it, nothing around it. That's just what it is. Some people teach, support and resistance. Also, when it comes here, it'll sell off. Those things are just concepts. Those things are false systems made up within the whole thing. So this, what I'm teaching you, is something that is really something you can actually apply and see where you can make profits. Do you understand what I'm saying so far? Do you have any questions?
Know what you're saying so far is like the most straightforward I've heard it, and then you give me a fresh outlook on how to look at it all.
Cool.
Because like everyone was complicated before. The big terms or like you said, the concept. So to break it down like this is pretty good.
Cool. Fair enough. Good. Hopefully, by the end of it all, you can actually walk away with this. You know what I mean, and apply it right away.
Yeah.
So, as a matter of fact, I can keep this here because I want to show you on the charts what it actually is. So remember, we just did this right based on this because it's literally the exact same thing. This is what I did right here.
Yeah.
See, it fits perfect. Good. So now that means these highs. I'll show you how I typically draw my charts. So these highs are this. Literally, after I show you this right now, we can literally end the call and you'll be able to make money just from this right now that I can tell you. Good. So those are my highs, right?
Yeah.
To make it as simple so that I don't confuse you, so that you don't confuse yourself. If you know that the market is buying, meaning you see on a higher time frame where the market is pushing upward, you can clearly see it's quite obvious that we're going higher and higher and higher. Therefore, you just want to continue on that momentum. Don't switch the momentum. Don't think, oh, it's too high, so let me sell. No, it's gonna continue on that thing. It's called a trend. Trend is your friend, as you hear all the time, blah 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 blah. Just continue with it. Therefore, if I see that the market is doing this, all I have to do is buy through the highs, and my stop loss will go right under the lows. So let me zoom in here real quick. Remember, this is the daily chart. When I go down to the 2-hour chart, you're gonna blow your mind in a sense, but how simple and easy it is. But that's the whole point of why teaching it. It's super simple. So when you go up, come back down, you're just waiting on a gap. That gap is, how can I explain it real simple? So this to this, you can see where this candlestick traded through this top almost immediately right after, right? So this second candle, it just traded through that top. Cool. Versus this candle and this candle, where you see that gap right here, it doesn't trade through that candle. The candle that trades through this high right here is this candle, as you can see, right?
Yeah.
Yeah. So yeah, cool. So this is where you would buy. You only buy when it trades through the highs, and your stop loss would be at the lowest point that it went to when it made the gap. Therefore, this would be your trade right here. On this one right here, this one is the one that traded through. Therefore, that would be your entry right there. The lowest point was right here, as you can see indicated over here. Remember when I just drew it? So this would actually be your trade on this side here. Same thing, this side here. This is the exact same thing that we're doing over here, but showing you in terms of candlesticks. But this is like cleaning it up for you, so this doesn't influence or cloud your judgment. This is the same concept over. The high creates a gap, goes to whatever low point. It could be down here, up here, wherever. Does this, and you put your stop loss under there. Then it trades through that. This is where you're entering. Simply put. And this is on one time frame, right? So you get the concept. You get the concept or no?
Oh yeah. So remember,
No, all good, man. I just want to make sure that you follow in with me, because I don't want to just speed ahead and then you just don't get it. You know what I mean? So this is how you would be doing it and then entering in the trade. So let's just say you caught that from right there. Right now, just on the max potential for where it went already. This is live price, by the way. As you can see, time is changing and time is moving. So this is actually what it would look like. So far, on a 1 to 2.91 basis, if this was $100 risk, you'd have already been up $291 profit. That's what this would look like. If this was 1,000, you'd be up $2,901, $910 profit. This is the most lucrative industry you can ever be in and make money from. It's just about you knowing how to do the thing, which I've learned, simplified, and reached that point now that boom, it's about to take off in a very good direction for me and those who I teach and those who catch the same understanding of the mechanics. Because it's not a concept, it's the actual mechanics. Right? Just look on it like this. Your body is a biomechanical machine, and you can understand it just like you talking about your diet, right?
Mm-hmm.
So if you can understand your body as a biomechanical machine, this is the literal same thing. It's a mechanical machine that does the same thing over and over, which is what I explained to you at the beginning, the supply and demand exchange. People are selling the price because they don't see where that is going to go higher, so they're selling it at a profit, and people are buying it at the cheaper price. Sorry, I touched in the screen. People are selling it because they've reached enough profit from all of this profit right here. They're selling it, and people are buying it again because they are getting it at a cheaper price. So versus buying it at 2005, if you can look on the right, people instead of buying it at $2,791, they're buying it down here at 2,500 and something. So when it comes back up to 2,700 and something, they have profit. This is just the exchange of the market. This is how the thing moves. So imagine if you bought from down here at 1,900 and it's now all the way up here. Even a step further, what happened if you bought it when it was only right here, $700 and something? You know what I mean? So
Yeah.
this is how you trying to get into anything that you get into in this life. Get in early, sell later on when the thing doubles or triples, quadruples, whatever. Cool. So back to how you're gonna trade the market. So you're just gonna buy through the highs, and your low is right where the lowest point is. This happens across the market endlessly. Let me just delete this. Everywhere that you see a high made, here's a high. You traded through that. If you bought right here and the low was right here, you'd be in profit. As you can see, another high right here, because it came up, stopped, dropped, and traded through right here. Now this is such a tighter entry, which awards you a lower stop loss, and look at your profit. This is a 1 to 11, risking $100. You made $1,100 right here, right? Like it's really crazy. Cool. So this is happening here right now, currently on gold. Let me even show you this. Cool. This is happening currently on gold. When price trades through the high, it becomes this type of high. All right. And wherever price leaves a gap, see it's gapping right now, as you can see on the daily chart. This becomes my liquidity target top. That's now where I'm aiming for price to go and trade through. Because remember, we're bullish, we're buying. You're not, just because of a red candle, you don't need to be selling anything, right? So let's just jump down now into the 2-hour chart. So remember, this is how it looks on the daily chart, right? Let me show you something. Let me show you why time frames don't matter. This is the same thing. These are the same daily chart highs that we put up. Can you see those?
Mm-hmm.
Right. Look at what you're seeing happening inside of this. It's the same thing on repeat. So this is a high, traded through. This is a high. This is a high. Hopefully you're starting to see the process of the simplification of this thing here. So all of these highs you could have bought into, and the lowest point was there. The same concept. Lowest point was here, right? And you can see where all of these trades would have been successful. Like, you wouldn't have been stopped out on none of these. You'd still be in these trades. So that same big old daily chart trade that we took right there, which was a 1 to 2.91, if you remember, this now just going down to the 2-hour candlestick chart, you've now increased that, and now this becomes a 1 to 7. And if you just keep on rinsing and repeat that same process, let's say we jump down to the 15-minute and we get down in here, that's the same thing you were seeing on the 2-hour. See? And this is the same thing that you saw on the daily. Now, guess what? What do you see on this leg up? It's the same thing. Let me actually just put this on. It's the same thing. You see a high here,
Yeah.
a high here. It's the same thing just happening on repeat. Because it's the mechanics of it. Nothing changes. See all the highs? So even just this one that you went 1 to 7, guess what? If you did this one on a 15 minute, that 1 to 7 becomes one to 18. And you literally, if you go down to the 1 minute, it does the same thing. This is how you get into trades that you get ratios like 1 to 30, 1 to 40. This is not like a random spooky thing that I trying to tell you. It's a real thing, which is crazy, because when people actually catch on to why I teaching and why I showing, that's when it gonna be like crazy. It gonna blow up like absolute crazy. You understand?
Yeah.
Hopefully I'm not losing you in the whole process. I hope you have questions or whatever it is, you know. Let me see now.
No, man. No, you don't lose me.
Good, man. Good. Cool. So in a live market now, seeing this, I only trade, now that you kind of see how the concept of it goes, of highs and lows, look at it right now, selling, right? Price is going down. So what would I be waiting for? Let me show you what I would be waiting for. I'd be waiting for price to come up, come back down, and do something like this. Break this, come back down, and start to do what? Let me stop from right there. Yeah, cross the high, because it gapped down. So I'd just be waiting on price to pass through here, and then I'd be buying right there. Simple as that. So simply put, this is what I'd be looking for, and this is my target top. This is the same daily part that came down a while ago. See, we literally just did this in here. So that's all I'd be looking for. And this is on the 1 minute. Was I on the 1 minute just now? 15. I was on the 15. Cool. Yeah, this is all I'd be looking for. So as soon as I start to see it make highs and break highs, like this one right here, I'd be very interested in getting into the market. Simply put. So this one would be my liquidity target top, because that's just how the thing functions. And while it's coming up here, just like in this, when it was coming up here and creating all these highs and highs and highs where you could have bought into, this thing can easily just start doing this and just keep on going higher. High. See the highs that they're breaking?
Yeah.
Coming down and breaking another high. Those are all buy opportunities. And this is just how the mechanics of the market works. It goes from liquidity to liquidity, because there's a hell ton of people trying to sell the market from here, thinking that, oh yeah, it's just gonna continue rolling off. But as you can see, those who thought that same thing right here got destroyed when it came back up. You understand?
Yeah.
Okay, well this can be finishing in about a few minutes. Let me see. So that can be like the first session that you and I have ever done. Oh, actually, there's quite a few people here. Big up to everybody who actually here and seeing this. Yeah, so you know, this is just the mechanics of it, and that's just how it works. This is the simplification of the entire system, and this is what I look for on repeat. This is what I've made money on doing on repeat.
Yeah.
You know what I mean? Yeah. And it's not gonna change. I can just prove that to you that it's not gonna change. Because if I go down to the monthly chart, this is where it's like it gets really creepy, right? If I go down to the monthly chart, this is the 1970s, bro. 1970s. What do you see? It's the same highs, the same highs, the same highs being traded through. Those who thought the same thing, I just said it. Those who thought the same thing of when it was going down, look at it, came up and continued doing the same thing. Let me just draw it out for you. Here's the liquidity target top, and here's the here are the highs. Here's one, here's second, here's another one. It's easy for me to spot because I know the system, right? But I can just explain it again now. See it here?
Yeah.
If I go in here, These are the gaps, as you can see, the gap, and then the one that trades through it is the one I'm entering on. Like this is the monthly chart. So if I was a conservative trader and I'm trading on the monthly type of thing or higher time frames, that would be my trade. And this is in 19, as you can see the date down here, 1977. Nothing has changed. Nothing has changed, bro. It's all the same thing happening on repeat. And then if we go straight to, so as you can see, right, this just did all of that. And if, let me see if I can move this. If I can jump straight back here, no. 2025, bro. Look at this. Same way, this is in 2014. Nothing has changed. Same thing. Same thing. Nothing has changed. What do I expect in the monthly chart to happen? Look at this. On the monthly chart, I expect price to either continue going up and doing some stuff like this.
Yeah.
Or for price to do this right now. Like mess around right here, maybe fail down a bit. But then do what? Come back again and do the same thing and keep on pushing back up. Because I have the proof of concept that it's been doing the same thing on repeat since the beginning of the charts. You know what I mean?
Yeah.
Way in 19, can I see? No, this is where it got creepy even for me to see. 1948. Bro, this is absolute crazy for me to see as well. So before candlesticks even existed, right?
Yeah.
Before candlesticks existed, look at the same thing. This is a high, came back down to a low, and then traded through the high. So even if I wasn't seeing candlesticks, this is what it would be. Why? Because supply and demand has been the exact same thing for years, decades, since the beginning of time. I have rice, you have cows. There's all of a sudden a demand for rice. I have the rice, you have the cows. Okay, give me 2 of your cows for some of my rice. The barter system, it's the same thing, supply and demand. So here we are, and I hope, cool. Well, that's like the first session that I could have showed all of you guys in like a live environment. Hopefully on a grasp the concept, hopefully you guys can see it. And remember, this thing happens on all time frames. It doesn't matter. Let me just say this real quick. The reason why time frames exist is because of this. If you're trading, let me see exactly how much time I actually have left so I can just explain it to you guys and done. I don't even see it. Oh, I have 5 minutes left. Cool, perfect. Big up on yourself, all you guys that are in here, right? So
Yeah, man.
Big up yourself, bro. So check me now. If you're trading on a higher time frame, it's because you don't have the time to be on the charts. So you work a 9 to 5, or you have kids, whatever the reason is why you can't be on the charts. That's the reason why you want to trade a higher time frame. Because remember, it happens on the all time frames. Nothing changes. It's the mechanics of the market. I can keep saying that because that's just what it is, right? And the lower time frames is because you have more time to be on the charts. Personally, for me, I have my subcontracting companies. I do my things personally, so I'm blessed enough to have the ability to have lower time frame access to trade, because I can create my own timing around my daily schedules. So I can be on a 1 minute chart, because I can sit down here for, well, how long is this? I can sit down here for 27 minutes and watch what the market is doing. Some people don't have that time because you're at work and you have duties. Now, if I was working a 9 to 5, if I work like you guys that work at the hospital, if I were you guys, I'd be trading on a daily chart, where I would have got in on this trade right here. Cool, I can just delete all of this because you guys get the concept. I would be trading on the daily chart, and guess what? January 2nd, when we got into this, because I remember being right here. You remember? I don't know if some of you guys, Shanaik, you're supposed to be in here, and Peter, you're supposed to have seen this too. When we were right here, this was just a couple weeks ago. Yeah, this was just a couple weeks ago, and I told you guys, like, okay, cool, we're buying right now. You understand? And look at the chart, like from here. If you guys, even on the daily chart, busy working, you could have been in this. That was your trade right there. If you guys had $1,000 and you put that in there, that's $28.90 in profit right now. Well, the price would have come down a little bit, so right now you'd have been, you know what I mean, but you'd have done tech partials and stuff like that, and you'd have been in this trade actively now for the past, so you'd have gotten in right there. You'd have been in this trade for the past month, right? But maybe that works for you. If that's not for you and you need to trade on a lower time frame, then maybe the 2-hour chart. You know what I mean? But I wouldn't trade anything lower than that, because then you have to split your time to watch certain things. But for me now, I use the 2-hour chart as my higher time frame to watch that. Let me show you guys something. On a weekly basis, it's the same thing. Nothing not different, nothing not change. If you don't have the time to trade the higher time frames, the lower time frames, use the higher. You're not missing out on anything. There's no different opportunities coming up. There's no surprises, manipulations, all these things. It's all the same thing on repeat, man. See there? These would all be your trades if it was on the weekly. See there? Same way. That would have been your trade. So you'd have been in this weeks ago. Weeks. 400 and something days ago. Over a year ago. You're just in goal. This is how the banks trade, guys. This is how the banks do it. On the 1 minute. On the 1 minute. See here? On the 1 minute right now. What you think happening? A lot of people selling. Whole heap of people. Gold selling off. Is gold really selling off? If you look on the daily chart, we're buying strong bullish. Look on the 2-hour chart. Strong bullish. No reason to be selling. For everybody who thought we were selling down here, guess what? Dog nyam this upper. Everybody who thought we were selling right here, dog nyam this upper. Everybody who thought we were selling right here, dog nyam this upper. Who you think supper going to get nyam when time? You know what I mean? This going to come up here and do that. That's just how the mechanics works, because that's how liquidity is able to move the market. That's how Bitcoin is. Bitcoin, since I've been on gold for the longest time, and I might think it's just gold. That's how Bitcoin is for the weeks. I could have tell you, based on the same mechanics, look at the same thing. I could have telling a guy, say Bitcoin were perfect to buy right here. See it there? Same high, come in right there. I could have tell you, say Bitcoin would have been bullish right there. Easily. Even just from right here, bullish. Why would you sell Bitcoin right now? Bullish. I don't care if it's Tesla. Jump on Tesla. Same thing. I could have tell you, say it would have been bullish right here. See the same highs there? Boom, bam. Same thing over and on repeat. From down here, look at that. Same way, on repeat. Doesn't matter what market. And I can throw a market at me right now. I think we only have about 2 minutes left. Yeah, like it's on repeat. But anyways, the concept is there. I understand this now. Hopefully, yeah, less than a minute. Big up on yourself for joining. Hopefully, I kind of understand even in depth what the thing is and how it works, how it moves. And yeah, I can use this on a daily basis, however the time frames work for you guys. And the call gonna end in a few seconds. I appreciate on joining. Hopefully the value is there for
Yeah,
you.
man. Big up yourself, Kevin.
Yeah, man. Big up yourself. I know it was a random meeting still, but yeah, we can have some more planned ones in the future.
Blessings for sure, man. Appreciate this.
Yeah, man. Not a problem, guys. Big up on yourselves. We plans for more, and then get the ball rolling. You know what I mean? Get on a profitable and ready to move. Big up on yourself. Cool. And that was a cool live session. You know what I mean? Hopefully you who watching this were able to actually get some value from it too. And yeah, we just continue based on what I seen on the 15-minute or even the 2-hour. Let's see, because remember, this is my time frame. I'm just showing you guys continuing, because those are the guys going right now. Excuse me. I waiting on the 2-hour to close above my MAs again, just like here, to indicate that we're buying again. Let's see, close below, so I don't care. Came back up, closed up here, left that gap, continued. I'm waiting on price to do the exact same thing. So I'm waiting on price to do something like this, break above here, close above my MAs, get lower, and then aim up here. I'm just simplifying this, right? So I'm looking at this. That's all I'm looking for. That's it. Maybe I would shift this down a bit like this, because I don't want it to close below. Yeah, and that's it. That's all I'm looking for. And then I would be buying through here. What time frame is this? That's the 2-hour. So I wouldn't be buying through here. It would more than likely be this as my liquidity target top. Remember, it's the same thing. So on the 1 minute, it could be where the trade is somewhere in here, and it's like this. And yeah, the stop loss is like that. And I'm aiming for this liquidity target top. Yeah. And I'm aiming for this liquidity target top. That's it. And as I upgrade my system to like, instead of taking partials in here, I just literally leave it to run to get to my liquidity target top. Because what do we see happen all the time? We see where the tendency is for price to actually go and hit that liquidity target top. But by the time I take partials in here, what could have been a 1 to 20 or 1 to 30 now becomes a 1 to 6 or a 1 to 8 because of partials. But should I leave it entirely, like say this was that trade and it's on the 1 minute, so it's somewhere in here, right? Of course it wouldn't be 116, but it'd be like this, where it's a 1 to 18. That is where I probably would take my first partial, which would be huge, you know what I mean? But anyways, yeah, hopefully all you guys got to see the thing and make sense of it and find value, man. Big up on yourself. Tough.